Hey everyone, just wanted to give you a video really to help you understand when we might reverse an entry, why we would even reverse an entry. It makes it helpful for us. So let's go back to our homework for the previous week in which we had that journal entry, if you remember, that we had salaries payable, excuse me, salaries expense of the $20,000, right? Or $10,000, excuse me. $10,000, right? And there's our salaries payable. And so we made this adjusting entry to account for 2 days of the payroll, correct? And that was done on 12/31 because we had 2 days of our week that was in that year. So we would go up to these T accounts here, and a T account is one way of looking at a ledger. Okay, so let's say this is our salaries payable ledger account in a T form. The T form is because the left-hand side are your debits, the right-hand side are your credits. This is our salaries expense T account. And so what we would be doing at this point is we'd be posting this entry, right? We'd post the $10,000 over here to the expense because that's the debit side, and we'd post the $10,000 over here to the payable, that's the credit side. Now remember, ultimately, we are going to zero out through the closing entries all of our temporary accounts. And one of those temporary accounts is this salary expense account. So the salary expense account is going to wind up being closed out. And thus, as it gets closed out, it has a zero balance. Now, when we start on January 1st, this is what those balances look like. We still have a $10,000 account that we owe, salaries payable, and our sales expense account is zero. Now, here's why we generally need to do a reversing entry. Our payroll clerk at the end of that week on Friday has $25,000 worth of payroll that she does, right? $5,000 a day. So she has $25,000 worth of payroll. Now, the payroll clerk, not completely understanding accounting and adjusting entries and all that kind of good stuff, does what that clerk would always do, what she always does, and that is she would then create the journal entry. So let's see here. That would probably be on the 3rd, correct? Because if this is 12/31 is the 1st, is a Tuesday, right? Then on 1/3 of the next week, at the end of that week, but we're in next year, she would post the salaries expense of $25,000. That's the salaries for the week. And we would get, let's say, just to keep it simple, it's actually much more complicated than this, but just to keep it simple, $25,000 of cash that went out in paychecks. Okay? Now, what that would wind up being posted to the general ledger would give us $25,000 in expenses, and of course, cash gets deducted. Here's our problem. Wages or salaries for January so far really should only be for that Wednesday, Thursday, and Friday, or $15,000. We are sitting here showing $25,000. In addition, we still are showing that we still owe $10,000 worth of salaries. which we don't. We've just paid all of those salaries. So there's two ways that we can fix this problem. One of those ways is just to get our clerk to understand that this is not the correct thing to do, and the clerk needs to understand that. And so what the clerk would do is do an entry on 1-3. That would be salaries expense of $15,000, salaries payable of the $10,000 because we're paying that off, and then cash of $25,000. So now you'll see if we do that journal entry, if our clerk does that journal entry at the end of the week instead, then we only wind up with $15,000 up here, which is what we want, right? That's what we want there. We also have now put the $10,000 debit over here, making salaries payable 0, and we're good, right? We're good. No big deal. Everything is what it needs to be. Once again, that's assuming, our clerk knows what they're doing and makes that appropriate entry. Well, we know more than likely the clerk's not going to get it right. The clerk is going to make this entry here because, we don't pay them to understand the accounting. We pay them to make the entry. So how do we allow them to make this entry, this salaries expense $25,000 and cash $25,000? Well, that's where those reversing entries come into play. So if on 1-1 we create a reversing entry, in other words, exactly the opposite, and I'm going to run out of space, so I'm going to have to abbreviate. The exact opposite of the adjusting entry we did, right? I don't have to put just a K there. I'm running out of space, right? Okay. So then when we post this, okay, and I'm going to get rid of this 25,000 because the 25 is not there, right? So now when we post this on 1-1, and let me use another color here. When we post this on 1-1, there's the $10,000 credit to account to salaries payable, right? Making that 0 now. And here is the $10,000. That's going to be, let me put it down here. $10,000 on 1-1. That goes to salaries expense. And now when this salaries expense journal entry on 1-3 is posted, we wind up with $25,000 here, netting us a balance of $15,000, exactly what we want. So, yes, reversing entries are optional, because if we can always remember to do this journal entry all the time, we don't necessarily have to reverse everything. Problem is, we forget. Or so we have somebody who is doing it that doesn't know to do that. That's the reason why we create this reversing entry, which allows it to kind of get rid of that, keeps us from having to remember it, and thus we can do what we always do, whether there was any issues or not, post just the plain old entry. I hope this helps with your understanding of reversing entries and why we would do them and how we would do them. Take care.